There's been a few shifting pieces recently in the chip race as companies fight for a spot on the chip sector leaderboard. Taiwan Semiconductor reportedly considering running Intel's U.S. factories, according to Bloomberg. Intel shares pulling back from a jump earlier in the week where U.S. Vice President J.D. Vance highlighted the importance of U.S.-based chip makers. Here with the latest on what's ahead in the semiconductor landscape, Baird Technology Desk sector strategist Ted Mortonson. Ted, it's really great to have you here because we keep getting these headlines fast and furious today. The latest, a report that the administration has approached Taiwan Semiconductor about this stake partnership, what have you, with Intel and Taiwan Semi to manufacture chips in the U.S. What do you make of that?
Well, Intel's somewhat of a sinking ship right now. They're having a lot of trouble on their 18A foundry node. They just cannot, along with Samsung, they're really having trouble at the 3-nanometer range. Now, you take TSM, which is, I would say, the gold-plated area of manufactured at these advanced nodes. They're already manufacturing in volume at 3-nanometer. They've cracked the code at that node, and they're really moving to 2-nanometer, which is the magical node. And the reason why they have such an advantage is that at 2 nanometers, you get about 15% better performance and about 30% better power profiles. And when you talk about GenAI, you need to be there, and Intel's not. So in some respects, the administration's move here is not unexpected. Intel's a national asset, not only from a security standpoint, but manufacturing in the U.S., and they need some help, and TSM's the only one that can render the lifeboat.
Ted, is it enough for Intel, though? I mean, you call it a sinking ship. Would this be enough to, I guess, plug the holes in that ship?
Well, they got to get rid of foundry. I mean, it's kind of a boat anchor on their profitability. If they get the 18A node to work, at least they'll be on the same node as AMD is. AMD has significantly beat Intel up, both on the client and the server side. The server side is where they really need to be at that next generation node because of power, and that's where all the gross margin is. So if they can get help on foundry, if you look at Intel's foundry, their largest customer is Intel at the server level, which again carries that high gross margin. They got to get it right, and they're just not there yet.
Ted, is a potential for either a stake sale, partnership, whatever it is, with TSM, is that a reason for investors to own Intel right now? It seems to have been this week.
Well, I think the weightings when I talk to portfolio managers, the weightings are very de minimis. So you're really looking at a valuation play. And if you look at the call options that were done early in the week, they're roughly at the 25 level. This would dramatically increase, I would say, Intel's valuation of getting rid of that foundry business. But TSM is not going to do it for free. The Trump administration has to negotiate a deal with TSM that they get preferential treatment, not only on if they do buy the foundry at the price they can buy it at, number one, and then an earnout provision. They're not going to give up the sacred cow of their IP at the 3 and 2 nanometer range. They're just not going to do it. It really puts their model at risk if it's not structured the right way that they truly profit from that combination.
Ted, I want to shift gears to another company here. A report out earlier this week that ARM will be launching a new AI chip with Meta as a customer. Curious what you just make of that headline, that report. Is that something that you think overall makes sense for ARM? Are they going to be able to compete in that AI chip space in that way?
It's a great question, too. I mean, ARM's late here. They're a royalty company that companies contract with on the royalty basis for their designs. Their designs are fantastic. I mean, if you look what's happening on the PC and also on the data center side on GenAI, a lot of these designs are ARM-based. Now, the problem, though, is that they are late. Nvidia is years ahead of them as it relates to an integrated silicon solution, whether it be networking, whether it be memory, whether it be GPU and CPU. That's going to be a very tough nut to crack. If ARM is going to be successful, they're going to have to be 20 to 30% better than any other chip out there. And that's a tall order. The other thing is they are now directly competing with their customers. And that would be Amazon on Trainium and their inference chip, Microsoft, Meta. It's interesting that Meta is going along with ARM, and also Google. I mean, a lot of these designs are ARM based, and if ARM gets into the fray here, they're going to be a direct competitor, not only with Qualcomm also. So I don't think it's that clear, and I don't think it's quite frankly, there's a lot that we don't know, and from a P&L standpoint, they really don't have a choice. They've got to get in the semi-IC space.
Ted, I'm curious your take more generally on kind of where we are in this Gen AI investment cycle. Obviously, we've just got a lot of big announcements about big numbers that the hyperscalers are spending. But you don't sound very enthusiastic, certainly, about some of these chip makers. The market, doesn't feel as enthusiastic right now. What do you think?
Well, take a look at the Microsoft chart, or take a look at some of the cloud titans there. They've kind of gone sideways for a while. And I think what's happening in the Gen AI area, it's one of the biggest technologies in our lifetime. We're just spending a ton of money. And there's been some advances, not only on the silicon side, but the software stack, where if you look at where training pricing and especially inference pricing, if you listen to the Palantir call, it's the second quarter that they basically said that inference pricing is imploding. So it's getting cheaper to run these models. And until we baseline and see really what the model is, the unknown is how much these cloud titans are spending. I mean, we're up 50% in cloud spend, over $200 billion for the big four in 2025. That's an astronomical number. And I just think for AI really to get going, we're going to have a digestion phase, and then the market will really pivot up to the upside.
Ted, we've talked AI chips for 5 minutes here, and we haven't really talked about Nvidia. I can't let you go without asking you about it. Overall, where do you feel like sentiment is at with that name, and to sort of what you were talking about there? Are we sort of at fair price at this point, and it feels like maybe Nvidia needs to start doing something a little bit, we need to see a little bit more over the next couple quarters? Or how are you sort of feeling about that name that I'm sure you get asked about quite a bit?
So there's a lot of open questions on Nvidia. From a retail perspective, this is a very lazy long, and in some respects, a retail investor is taking a knife to a gunfight on what the institutional investors are looking at. This quarter is going to be very interesting. And the reason why is NVIDIA is going through an architectural shift from what's called the old H100, H200 GPU architectures to Blackwell. And there's a server called the GB200, without getting too specific. This is a copper-based backplane server that NVIDIA introduced and was supposed to take off. In reality, what we're finding through our research is the hyperscalers want more of this optical solution that's associated with the B300, so they're waiting. And if the hyperscales are waiting on this infrastructure transition, NVIDIA is going to be forced to sell more Blackwell standalone GPUs. That will put some pressure on gross margins. To what degree, we don't know. And if you look at the January quarter coming up to be reported in a couple weeks here, a week and a half or so, that comp is up 72% year over year, where the street is right now. We just have to see them exceed that very difficult comp. And then where the institutional investors are really focused is kind of seeing the actual print for April. If that exceeds, then I think you're going to see NVIDIA move up and past the 140 level. But there is some real big focus on this transition infrastructure discussion and also gross margins on how that April guide comes in. That's what everybody's waiting for, is that April guide.
Well, in the meantime, of course, we'll get those earnings on February 26th and see if we get some guidance and how that looks. Ted, thank you so much for your perspective. Appreciate it.
Oh, have a good weekend. Thank you.
You too. Thanks.